Jim, how are you doing there? I think I see
I
now
re
you are connected.
I I redialed in and that seemed to work. I'm seeing a smile there on Bill. Okay.
Awesome. Awesome.
Yay.
Welcome,
Folks,
Jim.
again, thank you for your patience. Sorry
Yeah.
for the technical difficulties. James, speak
Yeah.
again and say hello to everybody.
Welcome.
Hello again, everybody. And now the pressure's on because I made you wait, and now it really has to be worth your
It better
while.
be good. That's right. It better be good.
Well, again, I just wanted to say that, James has been a strong business advisor, just as well as a good friend. We had the opportunity to travel kind of together as an adventure, checking out organic farms and biodynamic food operations in Costa Rica. Just about a year ago, we visited Punta Mona, our friends Stephen and Norman Brooks, a property down in southeast Costa Rica off the grid. We visited Earth University. We visited our friends at Finca Luna Nueva, which is an amazing place. But Jim, we're here again kind of for a different experience, and that's everybody has had to pivot greatly to ensure the health not only of their families and themselves, but also their businesses. And again, that's why we have you here. You've helped me guide me through this process. And as I was just kind of sharing with our audience, I'm experiencing it firsthand as well with Compass Natural. Started out hitting, trying to get an EIDL, EIDL loan, and now in queue for the payroll protection program. But, I'll toss it to you to give us a bit of an update from what you're seeing.
All right, fair enough, and thank you.
Hey, Jim, before you start, I was really curious if you could, when we talked last week, you mentioned, before you dive into EIDL, tell us a little bit about the CARES Act. I mean, what the heck is the CARES Act? I know when you started talking about it, I thought, this is interesting. I'd like to hear more about that.
Sure enough, and that's actually a good place to start because that's basically the 500-foot level, and the CARES Act became law March 27th. It was the second or third stimulus and assistance package. And of course, the CARES Act includes the loan programs that we're going to talk about. There's two loan programs. One's the EIDL, which has always been around in the Small Business Administration area. When President Trump declared it a national emergency, it made that program available to everybody, versus those affected by typically weather events, where New Orleans gets flooded and businesses there qualify. It also included the PPP. But in addition to that, there were a couple other things that might matter to business owners in terms of sourcing or getting their hands on cash. And those were some of the income tax provisions. Everybody's familiar with the $1,200 checks that went out to many, not all Americans. Someone told me as many as maybe 80%. Those checks essentially are advance income tax refunds from future returns is really how they work. But that's the $1,200 and then $500 a child.
So you're giving yourself a loan that still is, it's a loan to yourself from your future taxes.
That's right. And if you think about it, it's fronting you money you'd be getting anyway, so you're using it now. And you can adjust your withholding going forward, so maybe you never have it recovered from you.
And Jim, that's been delayed to July 15 now, right? I mean, where people and businesses have to file. Is it everyone at once now, because it used to be, March 15 for businesses and then April 15 for personal. Now it's all July 15.
Yeah, well, March 15th actually came and went really before a lot of the crisis occurred. So it's C corporations and S corps that mattered. But individual tax returns, which were due April 15th, all got pushed to July 15th, as well as the requirement for quarterly estimated payments. And to my knowledge, every state has also adjusted, those states that have income taxes, their filings to match the federal dates as well. But those $1,200 checks, those will get trued up on your 2020 income tax returns, which aren't going to be filed until April of 21.
What would be the reasons you might not get it checked, Jim? Because you're making too much money, or what might be some other bureaucratic or administrative reasons?
Well, it's strictly a matter of your adjusted gross income. And if you're single, that's $75,000. And adjusted gross income is before your standard deductions or your itemized deductions. So your adjusted gross income is always higher than your taxable income. The IRS went off of 2018 returns or the 19 if they had already had it. Many people don't file income tax returns just because they don't owe. Their income's not high enough, I should say. In which case they're using Social Security records to find those people. And if indeed you can't get found anywhere, the IRS on their website now has a methodology where you can go in and be sure that you're in their system to get paid. It went out as direct deposits first, and then manual checks, they're saying it probably could take, a couple, 3 months till they actually get all of those checks out. Mm-hmm. So that income tax refund is a small piece, not really significant to most business owners because a lot of them wouldn't have qualified. Other things that might matter, though, is in the qualified plan area and IRAs. So the service now, there's a new hardship distribution rule. You can take up to $100,000 out of your 401k or your IRA without an early distribution penalty if you happen to be younger than 59. And this $100,000 coronavirus-related expense, so that's a technical term, that you have to qualify for, though, but the $100,000 you can take out can either be reported as income over 3 years, or you can actually put it all back. Basically, a rollover is what we would call that, in which case, for those individuals, it's essentially an interest-free loan from your retirement account to yourself. Now, of course, if you need the money to get by and you're spending it and you can't put it back, then you can spread the income tax associated with it over a 3-year period. In addition, something that's different from this distribution, this hardship distribution, and by the way, you qualify for it if you've had the virus or are caring for someone who has had it, or if you've suffered adverse financial consequences. And, that's in air quotes. We're not sure exactly what that means, but likely many people would be able to meet the threshold, particularly if, you've had a job loss, or you were furloughed, or working less hours, or your business revenues dropped. So a lot of that's objectively provable. So I do think many people could meet that standard. So that's just a distribution from your IRA or qualified plan. In addition to that, and a little bit different, is the amount you can borrow from your 401k plan has been increased. You could always borrow from 401k plans for any reason. You cannot borrow from your IRA. Because of the CARES Act, they doubled the amounts you can borrow to 100% of your account value or $100,000, whichever is less. Used to be $50,000 and 50%. So they've increased how much you can borrow. You owe no interest on it until next year. If you have an existing loan, by the way, on your 401k plan, there's deferrals of those interest payments into next year. Also on the income tax front for business owners, many of the tax changes that came about in the Tax Cuts Jobs Creation Act, which was passed by President Trump at the end of 17, really happened in January of 18. It took away many business income tax deductions, the ability to carry over net operating losses, limits on business expenses, and things like that. All of those restrictions have been relaxed or modified so that for many business taxpayers, talk with your accountants because you may be able to file amended tax returns immediately, creating refunds for yourself. So that's a whole nother aspect in the CARES Act that opened up the ability to kind of create cash fast for business owners. Again, they relaxed rules that limited business deductions that were kicked in as a result of the 2017 Tax Act. So that's another way to access cash. So you have your retirement plan access, your IRAs. You also have the ability, depending on your income tax particulars, to file amended returns that could create immediate tax refunds.
Where would you learn more about that, the tax amendments?
Well, great question. That would be talk to whoever prepares your taxes, because they're going to know if you've had suspended operating losses, or if you have deductions on the amount of business interest you've incurred. In other words, your business has borrowed money and you have an interest deduction. There's limits on how much is currently deductible. Those have been relaxed. So your accountant who prepares your tax returns will quickly know if any of those items apply to you. So rather than make yourself an expert on how it works, talk to your tax preparer. If you do your own taxes, you'll know if you have, net operating losses, or if you've had interest deductions that were capped, things like that. If you had prior alternative minimum tax payments, those could come back and benefit you. So a number of more technical things there. But again, the idea was create instant cash in the form of a tax refund. And that's money to keep, by the way. That's a tax refund. That's not a loan. You're not paying it back.
Interesting.
And it's not paying anything either.
Hey, Jim, if you, so that's like some tax implications. Are there any other aspects there we should cover? We're trying to keep this to a coffee break time. And I want to make sure that people have an opportunity to ask some questions. So by all means, type in your questions and we'll ask them of Jim here. But do we want to talk about where we are with this PPP program at all?
Good idea.
That's right. Right into the loans now. And everybody knows a couple of days ago, was I guess on the officially April 24th, the PPP and Health Care Enhancement Act, everybody calls it the Enhancement Act, was passed. And that added another $310 billion to the PPP program, which ran out of money. All right. And within that, about $60 billion is reserved for small banks, credit unions, community lenders, try and push it lower down to smaller businesses. The emergency injury disaster loans, the EIDL loans, most businesses, aren't applying for those right now. So I want to focus on the PPP, which is the Payroll Protection Program. And the Payroll Protection Program will lend you, and people are interested in it because a great deal of your loan can be forgiven. So you can borrow money and not have to pay some or any of it back, depending. And so there's two formulas to it. And many people got closed out of the payroll protection loan because it ran out of money. That's changed. If you've applied, likely your lender still has you in the queue, but call and follow up to be sure you don't have to resubmit anything, to be sure that you're going to get dealt with. And the PPP, you apply directly with a lender, whereas the EIDL loans that I talked about a moment ago, those you actually apply directly to the SBA. So you connect with a lender, see if they are SBA, small business approved lender, many of them are, and then on their websites, they'll have a process to apply for the loans. In this go around, they've also made it clear that investment, hedge fund companies, investment firms, they cannot apply for loans. That was on, sort of embarrassing, so they cut that out. But I want to make it clear because I've done some reading. If you're a portfolio company, in other words, a private venture firm has bought into you, you're not automatically disqualified. All right. Whereas you're automatically
That's good news, Jim, because there's a fair amount of private equity helping support a lot of emerging natural product brands.
Absolutely. And I've heard that they didn't apply because they heard that they couldn't apply.
Yeah. Tell us a little more on that. And then we do have a couple questions coming in, and please keep them coming in. We'll ask them, but this is interesting.
Well, let's talk about this for a moment. They can apply. They are not disqualified because they have, they're a portfolio company. Now, if your portfolio company has majority control of the vote, then that's a problem. All right, and that's often the case. Whether or not they have majority equity in you, they may control the vote. Because if they control the vote, then it's going to be viewed as the actual hedge fund or private equity investor, and they're going to be, DQ'd, disqualified. But that's
so it's not about control of equity; it's about control of vote.
It's not percentage of equity; it's about control of the board decision making, right?
Okay,
that's right. Good way to put it, Bill. That's absolutely right. But if you're not knocked out of the box because of that, you can apply, and there is a requirement for everybody who applies, not just these portfolio companies that we're talking about. There is a requirement that you have a financial need. And many people have jumped right by that, which, maybe we'll find out if that matters. But you're going to get scrutinized. So you want to be clear in your loan that if you do have a private equity investors, you want to make it clear that your other sources of funds aren't available. That equity investor could simply be saying, hey, we're not pumping in any more money or helping you raise it. So you just need to address why you're in financial difficulty, and specifically address the fact that your other sources of capital are foreclosed or not readily available to you. So it's definitely worth doing. And I tell everybody who applies for a loan, find a way to include a cover note or a cover letter or a memoranda to your attachment, so that you can describe just a little bit about your business, what's going on, your methodology if it matters, and how you've arrived at your numbers. Because these loans, the processors, the local banks, they have no credit risk here. So they are not credit underwriting you. They're not on the hook for anything. In fact, you're not even personally liable if you borrow the money. And what they will lend you, just real quickly, is about 2.5 times your payroll costs.
Mm-hmm.
And payroll cost is a defined term. It's not just salary, it's benefits. But they cap salaries at $100,000. But benefits, they don't. So if you have someone on the payroll that's making more than 100, well, their retirement plan contribution as well as their medical coverages are based upon what they're truly earning. You can include that. So 2.5 times your payroll costs can be borrowed, and you can have an amount forgiven, and the amount they'll forgive has to include 75% of payroll costs. So essentially, you're able to apply for these loans for the payroll costs, utilities, rent, interest on a mortgage if it happens to be real estate in the business that is owned. So those items you can use this money to pay, but the amount forgiven will be has to be measured in terms of 75% of the amount forgiven has to go to payroll costs. So some rent and some utilities can get forgiven in the whole mix here, and so these programs go after them.
And then it's 8 weeks worth of expenses that will be forgiven.
Correct.
Beyond that, no. And Bill, forgive me, I know you had a question too.
I'm just going to say, what's the sort of current status of the filing this second go around? Have you heard any stories? The business I run, we just resubmitted Monday, but
I'm smiling because it's an interesting question, and that is the stories I'm hearing is that already in the queue spends the $310 billion.
So new applicants.
Yeah, right. I was going to ask that. Like, this money's going to run out in a hot minute too.
Oh, that may be, but our politicians are sometimes can rise to the right occasion. And my gut would be, if you've not apply. Even though you may get shut out of this round, there'll be another round. All right. And the thing I want to make out,
we were rooting for that second round to come through because the application was in queue, right? So at least when that did get signed last week, then I started getting some emails from the lender, which was positive news. Yeah.
That's right. Well, I think that it's definitely worth filing if you've not. And also keep in mind, for those listening who are sole proprietors or independent contractors, your compensation is included in your payroll. Normally it's not. That's what was totally new about this type of lending/forgiveness program. Typically, independent contractors, they don't qualify for unemployment. And by the way, they do now as well. But this PPP program will include your comp. Again, everything's capped at $100,000 of comp, which is $83.33 a month. But at a minimum, if you're a sole proprietor by yourself, don't have any employees, but made $100,000 or more last year, you'll qualify for $16,600 and change just based on your own comp, and that'll get forgiven. That's the 2 months that Steve mentioned a moment ago.
Got it. Hey,
yeah,
Steve,
and go ahead, Bill.
A couple questions, Steve. I know there's a couple in the queue.
Yeah, one, and I'm very happy to, I want to just shout out to the natural food colleagues. Also, I'm seeing colleagues from impact investing, socially responsible investing on board. So
Yeah.
Welcome, guys. Thank you very much. It's been a long time.
Cool.
Would love to get together. Krista Stohofer is asking, or Strohofer is asking, the income tax amendment forms you spoke of earlier, Jim. What does that apply to? Is
What
it
year?
2018 or 2019 taxes?
Good
Well,
question.
good question. You don't need to amend 2019 unless you already filed, in which course you can amend it. And it's a 1040X. There's a form for it, and you can go back 3 years or further back in time if you need to, because you have net operating losses that weren't used in a prior year and are carried forward. You can actually go back, use more of it, and then get a refund. So there's a form to amend a 1040X, right? And,
I like
right.
that.
And then you just simply redoing your taxes with and adjusting whatever number it is that's changed, which of course would alter your bottom line of tax owed. And if that decreases in a prior year, that creates a refund, which of course would, get kicked out to you. So, your tax preparer, they amend returns all the time. But if you've already filed 19, you can still amend 19.
Yeah. Can we go back to the payroll cost definition real quick? And you mentioned something near the end there of your explanation of what payroll cost is. And you talked about, did you talk about 1099 contractors as being included in that payroll cost? And how do you account for that? So
okay, great question. Because and it's a good clarifying one. If you have 1099 rather than W-2 employees, you do not include your 1099 people as part of your payroll. They themselves can actually apply for the PPP. Okay. So they're not
now,
part of.
Can they apply for PPP or unemployment? That's where I'm confused.
Or EIDL.
Well, yeah, I guess the answer is yeah, they can apply for all three. Now, if you apply for the EIDL and the PPP, the loans offset each other, all right? And so they would reduce your PPP, and you'd be better off not applying for the EIDL loan because there's no forgiveness there.
So
I see, and Paul Oakley had a question. He had applied for EIDL like I did at Compass Natural at beginning of April. He sent another inquiry and basically got back a letter that was just kind of a generic thank you for writing. We'll, don't call us, we'll call you.
Yeah, and I can confirm that no one is singling him out for bad treatment. That is universally the anecdotal information I've picked up from smaller businesses that applied to the EIDL side, because you could do that first. So a lot of people went right there. Now those are loans, they're 30-year loans. They're at I think it's 3.75% interest rates. Depending on the size of the loan, you may have to give up equity. So those types of loans are really geared more towards, I'd say much more manufacturing, large payrolls, lots of plant and equipment type businesses. Not that those can't be on the phone, but there's no forgiveness in there for payroll. So, and you can apply to both. So if you're large enough, you can run your payroll through the PPP side and also borrow for different expenses from the EIDL side and get them both. Now, the question about unemployment is an interesting one because yes, independent contractors can apply for unemployment now. The states are struggling because they're overwhelmed, and apparently we now know that they have ancient software, and that's really their problem. We were joking about guys, we could actually, we know what Fortran is, right?
Yeah, if you're a COBOL or Fortran programmer, the government wants you right now.
They need your help.
Right.
Good job.
But you do qualify for unemployment, and you probably could apply for unemployment and a PPP, but I think theoretically, if they could match it up, they wouldn't want you to do both. In other words, the PPP is I'm in business, I'm struggling, maybe I'm not making much, but I'm not planning on going out of business. But at the same time, if it's like, I'm done, I don't see it coming back fast enough for me, go get unemployment. Because what the federal government did was make independent contractors eligible for it. they've kicked in an extra $600 a week for 13 weeks. So whatever your
Then it's
state
no
would give you,
loan, it's a benefit, right? It's no
it's just
loan,
unemployment.
right?
It's just unemployment comp. Right, right.
Yeah.
And then whatever the duration of your state is, well, the feds will even give, extend that for another 13 weeks or something.
But I mean, can they get, I mean, a contract laborer filing for unemployment and getting it, can they still like get work gigs? Because that's what they do. They're a 1099 worker.
Do that. That's right. And unemployment will offset against whatever income you earn. So you can be working gigs, getting some revenue, but then that would reduce your unemployment comp. And if you made enough, it would, exceed and then shut it off.
Mm-hmm. Well, guys, we ran over a couple minutes here just to kind of accommodate a little bit our early technical difficulties. But I want to be respectful of everyone's time, our participants, as well as Jim and Bill. Jim, I know you have work to do there in Philadelphia, making sure everybody is taken care of financially in this crisis. Bill, you've got lots to do up there in the International Space Station, I'm sure.
Yes, a lot of experiments. Yeah, a lot of experiments.
Yeah, that's good.
So, Steve, I think let's go till about 10:07, since we got about a 7-minute late start. If everybody's cool with that.
I'm fine. And if anybody has any additional chat comments or questions, post them now. And thank you.
Paul Oakley just popped in to say, are there any insights into changes to quarterly estimated taxes and payments? And I know you touched on this just a little bit when Steve was going there on estimating taxes and payment schedules. What's your sort of 2 cents on that, Jim?
Well, the filing date for federal purposes has been pushed back. So what was due on April 15th for estimated payments, that's first quarter of 2020. And then you have your June 15 payments, which is second quarter of 2020. Okay. They've both been deferred until July 15th. Now, of course, your profits for this year, might look a little bit differently. And as you project that out, you might lower the amount. Now, not all states have deferred their June payments yet. Now, all states have deferred estimated payments that were in April, but not all of them are on board yet for the June deferral. The federal government acted quickly, and the states are real slow to catch up to that. And I realize the states are trying to manage their revenues too, and but so not all of them may be deferring the June payment. So check your state. You Google it, you'll find out. But not all states are there yet as far as estimated payments go.
We've talked twice now. I know you're a good old friend of Steve's, but both times we've talked, you've been pretty positive about the federal government.
Yeah.
And it's hard for me because I'm pretty negative about the federal government. But you seem like very measured about it, and you're a tax guy, and you've been really positive. Well, you want to say a couple things about what your thoughts are?
Well, I guess a little bit of history. First of all, what I really enjoyed about being trained as a lawyer, and I don't practice, I'm a tax guy, was having to argue a position you didn't personally believe. That was a skill. And the other thing, though, that I've learned too, with respect to the federal government, and that is that when the politics, when you get everybody together for a moment, it seems to be able to emerge and do something. And that occurred here in terms of pumping money into the economy very fast. And you can see how they did it. They sent, refund checks to people. They created, tax refunds if you had to amend your returns to, instant money. So they went at a lot of things to jam money out into the economy. And somewhere they figured 2 months, 8 weeks would be enough. We're almost, coming up on 8 weeks. Yeah. So from that perspective, I guess I kind of come away from that. And related to my early experience, my initial career was, I started out as a public defender, in Philadelphia. And, I would tell you very few of my clients I would have thought, were actually people you'd want to be friends with. But at the same time, I had no difficulty doing my role, which was, okay, these are the rules. The prosecutor needs to follow them, and just because you might be guilty doesn't change any of that. So I've kind of been able to separate, I guess, in my mind, and just sort of look at when it comes out as opposed to where it's coming from. Judge the what's happening versus the who's doing it. Because generally, I would probably personally be aligned to, with your sense of it, Bill. But
Well,
there's a lot of money pumped into the economy.
It's nice to, I mean, like I do feel like it's been positive on their end, but at the same time, it never happened fast enough and it was never enough. And you hear
Right.
other governments around the world doing what they're doing, but I think your perspective is really, really valuable. So I really appreciate that. We had someone ask for your contact info. Jim, do you want to provide that for us now, or should we do that in some other way? Or you can type it into the chat room if you want.
Yeah, I guess I'll just type it into the chat room.
That seems like a good plan. Maybe just
while you're doing that, Jim, I just want to let you know that Philip Miller, the founder of Hempy's Paper, it's timely. He found your webinar quite informative. He also likes my friend and colleague Al Hager's painting in the background. And Philip manufactures hemp paper bathroom tissue, funny enough.
Not funny.
So he was a part of this call. Thank you, Philip.
Yeah.
Something that I know is quite in demand right now. And actually, historically, some of the first commercial bathroom tissue available in America in the late 1800s kind of came in a container like the way we have wipes, baby wipes today, but they were made from hemp paper. So that was our very first toilet paper in America.
So, hey, Steve, you want to, while Jim's getting his contact info in there, he just typed his cell in there, I see. Let's thank our sponsor, Das Bog, again. And also, do you want to give away the 12-ounce bag of coffee now?
Yes, I think that we'll do this randomly. I think we're going to give the coffee away to Mr. Chris Bentley, a good friend out there in sustainability. Chris, thank you very much for joining the call. That was a panel of one that made that decision. And we'll do this each episode. Thank you to our sponsor, Das Bog. It's awesome coffee. Jim will send you a bag as well for joining us. So thank you. And
thank you.
Folks, thank you very much for joining us on our debut episode of Coffee Talk, inspired by Saturday Night Live, but we know nowhere near as funny, but we hope twice as informative. So thank you very much.
Yeah, thanks, Jim. Good seeing you, and thanks for the information. Really super cool.
And before we go, I want to make sure, because we're here at our desks, and I've been working on a feature article now for the last 2 months about how our natural products industry is on the front line of this coronavirus crisis. And I've learned so much about what our frontline workers are really doing out there in the grocery stores, in distribution, in manufacturing, and how they're at higher risk than we are. And I just really want to thank those workers out there that are keeping healthy food on America's table. Thank you very much, really, from the bottom of my heart. Being a part of this industry makes me really proud. So thank you.
Agree. Thanks, Jim. Take
James,
care.
any closing comments from you on the way out?
No, closing comment is I purposely put my phone number out because it's just easier to have a brief conversation, and rather than try and craft an email, because oftentimes it's just quick. So don't hesitate. I'm happy to chat with anybody.
Thank you for welcoming that, Jim. My best to you and your family. I hope to see you in September for Natural Products Expo East. Now that you're interacting with our community, like I say, we'll have to get you there for a day.
Yeah, that'd be great.
All right, everybody, take care, stay safe, healthy, and strong.
Yeah.
Thanks all.